Hello and welcome to Master Your Money, the True Potential series where we talk about personal finance, investing and how you can do more with your money. Before we get going today, please consider subscribing to our channel. All you need to do is click the subscribe button below, and if you press the notification bell, you'll also be notified when we release future videos in this series. Today I'm joined by George Bell, investment analyst, and we're going to talk about one of the most common questions we're asked: how do I buy shares? Hi George. So the idea of buying shares, there's the romanticised image of picking a stock and making money, but we know it's not that straightforward.
That's right. If it was that simple, everybody would be doing it. And there's a reason people talk about gambling on the stock market.
So is buying shares best left to the professionals?
The actual act of buying shares is relatively straightforward. These days you can buy shares quite easily through an online broker or through a trading app. This has led to an influx of people promoting things like share dealing and forex trading as a way of getting rich quick, but the reality can be quite different. It may not seem as exciting, but we believe in setting up a direct debit into a properly diversified investment portfolio, believing that remains the best way to increase your wealth over time.
And of course, while it's easy to buy a share, identifying a future performer is difficult.
That's right. It's easy to think in retrospect you could have invested in Amazon 20 years ago and made a fantastic return, but for every Silicon Valley company out there which makes it, there are thousands which go out of business entirely. As an individual investor, you probably don't have access to the information you need to properly understand the business, things like its revenue, its profits, its future projections, in the wider context of the industry which it's operating within. We use thousands of experts spread across the world to gather that type of information so we can make our investment decisions. And we use over 200,000 holdings across our portfolios, which would be very difficult for an individual investor to replicate.
What are some of the risks of individual investors buying shares?
With investing, your capital is at risk, so the value of your investments will rise and fall, and at times you may get back less than you initially invest. And past performance is not always an accurate indicator of the future. Before investing in shares, an investor needs to do their research. They need to understand the companies which they select. Having too great a concentration in one particular area could be problematic. For example, if you were to invest in Facebook, Amazon and Apple, they're all technology companies. So if there is a change in regulation or change in the economy which has an impact on the tech industry, then the value of all of the assets in that portfolio could fall.
What other options are there for someone who wants to invest?
We believe in diversification, the strategy of spreading your investments across a range of industries, asset types and geographical areas. This gives you exposure to a range of shares, but crucially looks at factors that could keep your investments growing even when other parts of the market fall. We've gone one step further in our approach, using what we call advanced diversification to also diversify our portfolios by fund manager. Rather than following a single strategy, we blend multi-asset strategies from a range of fund managers into what we believe is the best position for our clients' money.
So you're still buying into shares, but with an expert guide in the investment?
Correct. The funds may also invest in other types of assets, including bonds, collective investment schemes and precious metals, which diversifies your investments further. We look at a huge range of data points every single day to make our decisions, all fed into our team from over 200 worldwide locations. Unless you want to make buying shares your full-time job, I would leave it to the professionals.
Does all that expertise make it more expensive to own a diversified portfolio?
Not at all. In fact, share dealing accounts often have a cost per trade, whereas a portfolio usually an annual fee, and that's a small percentage of your investment. For our True Potential portfolios, that's around 0.8% per year, Jenny. Plus, you can get started from just £1, so there's really no financial barrier to entry.
If you're thinking about buying shares, it might be worth talking to a financial advisor about your goals first. If you're trying to build a long-term wealth, putting your eggs into one basket is never a wise idea. As we've said before, we believe setting up a monthly direct debit into a diversified portfolio is the best way to reach your long-term money goals. Thanks for watching. If you found this video useful, please leave a like, and if you have any questions about shares or diversification, let us know in the comments. Don't forget to subscribe to the True Potential YouTube channel for more of our Master Your Money series.